So this is the Aphrodite Camera Co presentation to the Board of Directors. Here are some of our financial performance trends. So first of all, we have our trends in annual total revenues. So I did the total one in top in gray, and then I also broke it down by the camera revenue in blue and the drone revenue in green. So as you can see, it climbed really steadily up until it had a bit of a dip in year 13, but we ended up peaking in year 14 and still having a pretty solid year in year 15. Our peak was at about 1,124,509, and that only dropped about by 500 in year 15. So the cameras were generating more revenue for us until you can see in year 11, drones overtook that. They kind of came close again in year 12, but drones ended up being our moneymaker by a decent bit at the end. So also in earnings per share, that climbed pretty steadily until year 11. We had a bit of a dip, but we had our best year of the game in year 15, where we ended at 11.71 per share. This was a little bit more sporadic, a little more volatile, but it still climbed pretty steadily. And we had a great increase from 14 to 15, where we ended with our best return on equity yet, which was 74%. Our credit rating was probably one of our strongest assets. We began with a B, and that climbed steadily and remained at an A rating from year 8 to year 15. Our stock price, that was definitely what we took the greatest loss on at the end of the game. It climbed really well until year 11 again, and we went into a bit of a slump. Our peak was 343.22, and our last year in the game was 281.76. As far as image rating goes, we definitely strayed a little away from our vision here. Our peak was at 90 as of year 10. And then as of the last year in the game, we hit 79. So we definitely like to see that increasing in the next couple of years. And then we're going to get into some of our strategy. Alec, if you want to go ahead and take over.
Yeah, thank you. So for our strategic vision, we kind of wanted to be a company that set out for wide range of products and like high quality products, obviously, because you want to establish a reputation to where customers can trust you and they'll buy from you consistently. And then we also wanted to make sure that it was important and emphasize the employee and like the workspace and making sure that we had a safe workspace and that our employees enjoyed working with us. And next slide, please. So for our performance targets in the next 2 years, we want to be at a image rating of 85. We want our return on equity to be 65%, to maintain above 65%. It's at 74% at the end of year 15. We just want to keep it above 65%. We want to increase our earnings per share to $14 by year 17. And this is a big one, the last one here. We want our stock price to be $3.30 by the end of year 17. It's currently at $2.80. Like Rachel said, it dipped down, but I think we can get it back up above 300 at least by year 17. Next slide, please. And then for our competitive strategy, it's kind of the same for the cameras and the drones. We wanted to emphasize P and Q rating, but then we kind of like shifted that focus into like supplying a wide variety of products, and we kind of like strayed away from the PQ rating, but not fully. Next slide, please. And then, like I said, it was kind of the same for both the camera and the drones, that we just wanted to make sure that our PQ rating was above, but we also wanted to offer a wide variety of products. And we priced our cameras to where we had a profit margin around 20% while keeping the market share above 20%. And like we just kept the consistent strategy across all 4 regions. Next slide, please. And then as far as our production strategy goes, we made an early investment in year 7 in robotics upgrades for all UAV and ACC workstations. We did several upgrades to UAV and ACC workspaces and tables in order to avoid OT and still meet the unit demand. And then we maintained the maximum compensation for best practices and productivity improvement training. And lastly, we had the highest compensation in the industry for our ACC and UAV workforce. And then our financial strategy, we chose to maintain regular dividend policy where shareholders receive annual dividends. And we avoided taking out any new loans, so we didn't have to pay anything back. And then we also had a high investment in corporate citizenship, and finally had a strong focus on credit rating and return on equity. For like our strongest competitors, it was Elite Electronics and Cam and Fly. And as you can see by these charts, they really turned up their game, I guess, at the end, because their demand for units increased especially in Elite Electronics, it increased like tenfold by year 15. And then as you can see with Cam and Fly, year 14 and 15, their unit demand in Asia just got higher than ours and just like stayed higher than ours. And they really dominated in Latin America too. And I think that was one of the reasons they had that big push at the end and were able to beat us in the simulation. As far as our competitive strategy goes, for cameras, we wanted to decrease price in Asia Pacific and Latin America, and we wanted to focus our efforts on North America, where we were most successful, and decrease the investments in the lower profit areas like Asia Pacific and Latin America. We kind of set out to do that right at the beginning. We were thinking that North America would be like our target, and then we did think that Asia was going to be a higher target than it was, but we chose to lower our investments in Asia and Latin America just because it ended up not being our best market. And then we emphasized an increase in PQ rating for both cameras and drones. We wanted to make sure that we were delivering a quality product, and we wanted to make sure that we were confident in what we were selling. And then,
sorry.
No, you're good. You're good.
Lesson learned. Learn from the past mistakes by studying trends. For example, when going through the annual data, I noticed a trend of being increasingly successful until year 11, and then hitting a slump. This holds true for total revenue, EPS, ROE, stock price, and image rating. This leads me to wonder, what was the reason for our success in year 11? What mistakes did we make in year 12? What did our competition look like that year? From here, we can begin to formulate our improvement plan. Next, please. Make sure your actions are aligned with your overall vision. Sometimes we can get caught up with short-term goals and forget our overall vision. For example, we noticed a drop in image rating, which tells us we have strayed from our mission of satisfying our customer needs. Leverage your strength. It is important not to focus much on the competition's success and attempt to copy what makes them successful. What the focus should be on is building our core strength, improving our weaknesses, and using that to create a strategy perfect for us.
And that is the end of that presentation.